And workplace messaging company Slack reporting its first set of quarterly results since going public in June. The company beat Wall Street expectations, but it also forecast a larger than expected loss for the current quarter. That putting some pressure on the stock this morning, down about 12%. Joining us right now is Slack CEO Stewart Butterfield. First interview after now being an official publicly traded company, your first quarter out. What are investors getting or not getting about what's happened here?
Well, I mean, investors are going to make decisions over the long run. This is a very strong quarter. But whether it's up or down, yesterday up 8%, the regular market down after, it's not going to make a whole bunch of difference to the long-term holders or to the business. This was a strong quarter, 145 million revenue versus 92 million the year prior. And we're happy with that.
Let me ask you a question about this. This is MKM Partners, the analyst there wrote a note, said, as a private company, you can grow at all costs. As a public company, you have to grow at reasonable costs.
Yes.
How do you define reasonable costs?
Well, we're in a strong cash position. It's close to $800 million in the balance sheet. And full year, we're looking at minus 100 to minus 110 million in free cash flow. So that seems prudent and responsible. One of the reasons we did the direct listing in the first place is because the strong cash position. So when we see opportunities, growth is the priority. I don't mean growth at all costs, but growth
in terms of the priority of monetizing certain customers. I think that's another issue that analysts and investors have been looking at, which is a lot of small businesses get your service effectively for free. It's really the larger enterprises that are the ones that are paying. How much focus are you planning to put on trying to monetize the smaller folks?
That might be a little bit of a misperception because there's 100,000 customers. And there's 500 companies in the Fortune 500. So we're talking 99,500 who couldn't possibly be there. There's a lot of small businesses there. So I think what people get hung up on is we talk about 600,000 organizations using Slack and 100,000 paid customers. But among those paid customers are organizations that have hundreds of thousands of people, tens of thousands of people. And among the people using it for free are people working on home renovation projects or planning weddings or organizing their kids' soccer league who we don't expect to pay, but who are great spread for us. And that's how Slack gets introduced into new companies and people become familiar with it.
Hey, Stewart, it's fun being a public company, right?
Yeah,
watching,
this is exciting.
Kind of watching what happens.
Look, I'm on TV. Hi, Mom.
But to be watching swings like this, when my guess is you guys were being pretty upfront and honest as you could be when you were talking about the guidance you were expecting that you gave when you first, right before you went public. You miss it just slightly, and the street's like, wow, what happened?
Well, we beat our guidance. We beat the consensus estimate, and we raised for the year. So I think there are nested expectations that go up.
And that's the crazy thing about Wall Street, right? Trying to figure out how to help analysts get some of this guidance. I think it's a crazy game. A lot of companies just get into this habit of kind of spoon-feeding the analysts and telling them these things so they don't wind up with big swings like this. But what's it like trying to absorb all this for the first time as a public company and realize there are crazy swings based on very small revenue or earnings shifts that you get punished so greatly when you're doing your best to just kind of be upfront and honest about where you see things.
Yeah, it's an interesting debate that we even had before. Like how much where do we want to guide to? How close is that to what we really think is going to happen? When you're growing at the rate that we are, adjusted for some of the one-time stuff, 66% year on year, that's a hard thing to model. There's a lot of one big deal can make a big difference for us. One postponement of something can make a big difference. So we try to be, as you said, as upfront as possible and not get into a dynamic where people have an expectation that whatever we say is really going to be 8% or 10% higher. We're constantly beating and raising.
Speak to the concern, to the extent there is one, about the competition with the Teams service that Microsoft has, and in terms of the number of people supposedly using Teams versus Slack.
I would be happy to. So, when we look at this quarter, one of the things that was really exciting for us was just win after win in enterprise. And when you get into large enterprise customers, almost all of them, I don't know the exact number, are Office 365 customers. So almost all of them have Teams available for free. And, a couple years ago, they chose Slack when they had Teams. Last year, they chose Slack and expanded. This year, they chose Slack, many of them going wall to wall. So whether it's free or not isn't really so much the issue as whether it provides value to people. And in addition to that, one of the things we're excited about is shared channels, which is a feature that we've had in beta for a while. 20,000 of our 100,000 paid customers, so 20,000 companies opted into this beta, started to use shared channels, and that could be consultants or contractors collaborating with the customer, or it can be companies providing service or customer success over shared channels. the density of that network has increased, the intensity of usage has increased, and later this quarter, we're going to make that available to the general public.
So, Stewart, we had an analyst this morning who said his big sticking point is he wants to make sure that this is not just niche, that it's not just tech, that it's really something that's bleeding over. How would you respond to a concern that an analyst raised today about that?
I think you could just look at the customers. And one of my big challenges as the CEO is remembering which customers we're allowed to talk about and which we're not. So I know, I'm sure the producers have some logos they can flash. But we're in financial services, we're in healthcare, we're in retail, we're in government, expansion in the federal agencies. This last quarter, some huge wins in Europe and even more in Japan. So like NTT, NEC, those are giant organizations, and there's huge adoption. So I'm going back to Tokyo a week and a half from now, my 4th trip this year. It's a part of the business that has outperformed. And I think what's interesting there is there's this big push from the federal government in Japan for what they call workplace reforms or work style reforms. And part of that is aging demographic, best blue-collar productivity in the G7 and worst white-collar productivity. So there's a lot of reforms that they want to make that increase organizational performance, and Slack just slides right in there because it's one of the few tools, I think, that leaders of the organizations and end users, the employees, can rely on to increase the degree of alignment, to increase the degree of agility of the organization, and increase performance overall.
Any lesson in the last quarter, given the service disruption, in terms of as you build the scale issue, what that ultimately looks like? I'm starting to think as you become more of an international company, what you have to do there?
Yeah, so what you're talking about is the service credits that affected our top line numbers. The lesson was when we were 6 months out in market, a young company with very few customers, I said, hey, we'll give people 100 times their money back, which is not the industry standard for those kind of service level agreements. I also said the standard is 3 nines, so 99.9%, and we'll do 4 nines, 99.99%. The customer centricity in that is something that we absolutely want to retain. Some of the contractual terms that have that outsized effect are maybe not a good idea as a public company or even as a private company. But the thing I want to make clear is if we had Microsoft or Salesforce or Workday or ServiceNow's SLA, we wouldn't have paid out anything because we cleared 99.9%. We just didn't hold ourselves to that 99.99%. Right. And I think we had more uptime than many competitive services over the same period.
Final question, path to profitability. It's the question that's always on the mind of everybody. What do you think?
Yeah, I think the priority for us is free cash flow break even. So if we can put $1 in the bank at the end of every month, but we're investing in growth, that would be the kind of ideal scenario because we're single-digit percentage penetrated into a market of hundreds of millions of people, and we're just scratching the surface today.
Okay, Stewart Butterfield, thank you for being here.
Thank
Appreciate
you.
it. Come on back. We'll make this a quarterly thing.
All right.
Appreciate it.